Welcome back to Dream4Coins, where we bring you the latest in crypto insights and analysis. Today we're diving into a special topic, SOL ETF. We'll cover everything you need to know about this unique token and why it's creating waves in the crypto world. As always, I want to remind you that I'm not the owner of this token, and this video is purely educational, not financial advice. Please make sure to do your own research and consult professionals before making any investment decisions. So, let's get into it. SOL ETF is one of the most intriguing tokens on the market right now, and today we'll actually be talking about two different SOL ETF tokens. Both are listed under the Solana blockchain, and they're bringing a new level of investment opportunity to those who are bullish on Solana's ecosystem. The first SOL ETF token can be found on CoinMarketCap under the contract address ending in 2050, and the second one is listed under a different contract address ending in 52HTRM2. Make sure to double-check these when you're making any transactions to avoid confusion between the two. Now, why is SOL ETF interesting? Well, these tokens are designed to mimic the performance of traditional ETFs but within the decentralized crypto space. For those unfamiliar, an ETF or exchange-traded fund is a type of investment that tracks the performance of a basket of assets, like stocks or commodities. In this case, SOL ETF tokens aim to track and invest in Solana-based assets, allowing you to gain exposure to the Solana ecosystem without having to manage individual tokens or projects yourself. This makes it easier for crypto investors who want diversified exposure, but might not have the time to track individual coins. One of the reasons SOL ETF is so appealing is that it simplifies the investment process for those who are bullish on Solana, but may not know which specific tokens or projects to invest in. By holding a SOL ETF token, you're essentially spreading your investment across a variety of Solana-based assets. This reduces your risk compared to putting all your money into a single token, while still allowing you to benefit from the overall growth of the Solana ecosystem. If you're thinking about purchasing SOL ETF, you can find both tokens available for trade on popular decentralized exchanges, like PancakeSwap and Uniswap. Again, just make sure to verify the contract addresses before making any purchases. The first token's address ends in 50, while the second token's address finishes with 2HTRM. Let's talk a bit about why Solana is such a critical component of these ETF tokens. Solana is often praised for its high-speed, low-cost transactions, and that scalability has led to an explosion of interest in DeFi projects built on its blockchain. Because SOL ETF tokens are built on Solana, they benefit from these same features, fast transactions and low fees, which makes trading them much more efficient compared to tokens built on slower, more expensive blockchains. Another key point to mention is that SOL ETF tokens bring more traditional finance investors into the crypto space. By using a tokenized ETF model, these coins make it easier for people who are familiar with traditional ETFs to transition into the world of crypto investing. If you've ever traded an ETF on the stock market, you'll find the concept pretty similar here, except you're dealing with decentralized assets on the Solana blockchain. A major focus of the SOL ETF project is transparency and security. Since these tokens operate on a decentralized network, all transactions and holdings are publicly visible on the blockchain. This transparency ensures that you know exactly where your money is going and how the underlying assets in the ETF are performing. You don't have to worry about opaque management practices like you sometimes do with traditional ETFs. Additionally, the project has built-in mechanisms to rebalance the basket of assets that make up the ETF. This means that as the Solana ecosystem evolves, and certain projects perform better than others, the token will automatically adjust its holdings to reflect the strongest performers. It's an efficient way to stay invested in the best Solana-based projects without having to manually track and adjust your investments. So what's next for SOL ETF? According to their roadmap, the project plans to expand its offering by launching new versions of the token that track other types of assets within the Solana ecosystem, including NFTs and gaming tokens. These expansions could bring even more diversification and investment opportunities for token holders. The project is also working on improving its user interface, making it easier for everyday investors to buy, sell, and manage their SOL ETF tokens. If you're interested in learning more about SOL ETF, I highly recommend visiting their official website at solidf.vip. The site contains all the information you need, from the tokenomics and team members to upcoming features and partnerships. It's a great resource to help you stay informed and make educated decisions about whether or not this project aligns with your investment goals. To wrap things up, SOL ETF tokens are a revolutionary way to gain diversified exposure to the Solana ecosystem. They simplify the investment process by allowing you to hold a single token that tracks a basket of Solana-based assets, making it an appealing option for both experienced investors and newcomers alike. But remember, the crypto market is highly volatile, so make sure you're doing your own research and never invest more than you're willing to lose. If you found this breakdown helpful, don't forget to hit that subscribe button here on Dream4Coins for more updates like this. And remember, this is purely educational. I'm not the owner of SOL ETF. I'm just here to provide you with valuable insights. Until next time, stay safe and happy investing.